We're back in Investor Townhouse headquarters in San Diego, California. I'm your host, Daniel Wong. On today's program, we have two very special guests. Welcoming back CEO of CrowdfundX, Darren Marble, and CEO of Tripoint Global Equities and the online division BANQ, Mark Elenowitz. Guys, thanks so much for taking the time with us today.
Appreciate you having us.
All right, guys, so you just completed not too long ago the historic Regulation A+ IPO with Fat Brands, $24 million. Guys, tell us about how bringing that iconic brand to the public has meant so much for this particular crowdfunding experience.
Darren, you want to take that or you want me to go?
Sure. I mean, look, Fat Brands is an iconic brand, as you mentioned, and I think it's obvious now, 30 months into the Reg-A industry, that branded companies, retail, consumer-oriented products just have a distinct advantage, and I think we saw that play out in spades for Fat Brands on multiple levels. Obviously, it was a fun deal to be a part of, and I think it makes a big impact when a firm like ours can go out to tier one broadcast, digital, print outlets, and it's not a layup, but I think we're seeing a lot more earned media opportunities with companies such as Fat Brands.
And Mark, you led the way as far as the raise go and taking in as the agent there. Tell us about that experience. I mean, Fat Burger being an iconic brand, all growing up with that type of cult following there. How was that like?
Well, that's exactly what we try to do here at Tripoint and BANQ. We developed the methodology of taking Reg-A to the next level, of using it as an ability to bring back the small cap IPO, where we've been able to merge the crowd, what we call a hybrid model, where we have the crowd, we have the Wall Street's traditional syndicate, and then institutions. But it only works for brands that have revenue, brands that are growing, brands that are iconic, brands that have a large customer base, affinity group, something that's going to want a consumer or a customer to be a part of the success of that company and get a chance to grow. So what we looked for, and why Fat was so amazing, is that it was an opportunity where all these customers who enjoy the burgers, enjoy the food, enjoy this iconic brand for the last several years, finally get a chance to play side by side, where normally Wall Street's limited to institutions. This allowed the individuals to finally get level playing field and be a part of what the rest of the street has always been able to participate with. And then working with Darren and some of the other providers, that really gave this global view and not only gave everybody an opportunity to buy the stock or participate in the IPO, but it also took Fat, who is well known on the West Coast, has a lot of following, but is not very well known here on the East Coast. Suddenly now there's demand for restaurants to be opened and for the franchise to continue to expand.
And Darren, both you and Mark, I think you've both touched on this before, that you said that these would be a hybrid model approach, but now you're seeing this big industry take off as far as crowdfunding go. A bulk of the raise was done through crowdfunding. Kind of tell us about the challenges there and why you saw it developing that way.
Well, yeah, actually, just to correct you, the bulk of this raise was actually done through, Mark's efforts, syndicate, institutional investors. Maybe a third of the campaign or the raise for Fat Brands was done online, which if you think, maybe $8 million, that's a tremendous amount of money to raise for any company online. And I think the reality is a company that desires to raise $25 million, realistically, the only way for them to achieve that type of outcome is through a hybrid approach. Maybe one day, 5 years from now, 7 years from now, the same type of business would be effective doing the entire 25 million online. But today, there's clearly an opportunity and a need for some of the traditional capital markets players, such as Tripoint and BANQ, to participate and provide strategic guidance and value, and ultimately capital raising abilities for these companies to ultimately be successful.
And so we've always talked about what type of companies are a good fit and the challenges go around, this type of thing. What do you think are the right companies? And again, could you touch on maybe some of the challenges for companies that are looking to do something like this and follow in the footsteps?
Yeah, I think the first thing that any entrepreneur needs to do is look in the mirror and decide, is this really the path they want to take? Is it really appropriate for them to be a public company? And the beauty of Reg-A when it was created and what Congress did and then the SEC did was that you don't need to use an intermediary. You don't need to use a broker-dealer. You can do it on your own. But I think a lot of these companies are finding it to be challenging to attract investors because, as Darren said, the crowd's just not there yet. In a few years, they will, but the crowd's not powerful enough to drive an entire offering. So you have to look at it. What's going to attract the crowd? What's going to attract a Wall Street institution and Wall Street brokers? And we look for things based upon fundamental analysis. These companies have to have not only the crowd component or the sex appeal, but it also needs to have a bottom line business that actually makes sense, that's growing, that has earnings, that has revenue, and that's continuing to expand. We like to say we're raising money not to keep the lights on, but to grow it to the next level. So most of our clients here at Tripoint, they're all between 20 and 200 million in revenue. They all have large social media followings and affinity groups. And most importantly, they're businesses that are not in the startup phase, but they're in the expansion, whether it's hospitality, consumer product, or food and beverage. That's really the focus that we're looking for. And I think those will ultimately be the best candidates for Reg-A, because it bridges all those issues of being attractive enough to the crowd, but fundamentally strong enough for Wall Street.
Well, I think you've both set the stage showing that this model does work. And now that, Main Street's meaning Wall Street, how is this affecting the industry? Where do you see this now going forward as far as an example for other companies?
Well, we're seeing it on our side. Wall Street's waking up to it. We have larger firms that are approaching us that recognize that Wall Street's always been limited to the elite of the institutions, and that they've kind of forgotten about the crowd and the retail investor. So they're recognizing now that there's liquidity that's coming into these issues, there's distribution. So I think we're seeing more and more good, strong players, at least on the street, taking notice. And I think we're seeing better iconic brands that are waking up. We've been approached on a weekly basis. We probably have between 10 and 20 different companies that are approaching us each week, looking to explore this as a new way and a viable way for capital formation.
So just recently, you all just announced another IPO here with Level Brands. Mark, Darren, or would you guys want to talk about that as well here for us?
Yeah, Darren, you want to take this one and then I'll finish it up?
Sure. So again, another really exciting company. Level Brands is a brand marketing company, and Kathy Ireland, who's one of the most iconic models and now business entrepreneurs on the planet, is the chairman emeritus and chief brand strategist. Honored to be a part of that deal with Mark. Again, another hybrid Reg-A plus IPO, combining aspects of Wall Street and Main Street investors. And what's incredible from my standpoint is it really levels the playing field, and it might be overused term, but it's true. An everyday American can get the same terms, the same deal, invest under the same cost basis as some of the institutions and brokers in the syndicate. And I think that's just truly incredible opportunity. And we're going to see the crowd piece of these deals grow over time as a result.
Yeah, the other part of Level Brands that was so exciting was this was a transition point where we're seeing a lot of issuers that were going down the traditional IPO route, which is called an S1, where they recognize the benefits of Reg-A, because in an S1 you have a quiet period, you have limited disclosure during the offering process, and it doesn't really give the ability to communicate in a modern age in a digital format. But using Reg-A, you can do that. So the Tripoint methodology that we developed is it makes it look, act, and feel like a traditional IPO, meaning that it settles. And that's really the key, is it will settle with Wall Street, broker to broker, and allow shares to be able to be traded immediately and for those shares to show up in the account. So Level Brands decided to switch halfway through their process of going from an S1 to convert into a Reg-A plus, and I think the experience was great. It really allowed the brand to get out there and get visibility, and for Kathy and more importantly the whole Level Brands team to be able to communicate the excitement and the things that were being developed over the last several months to their fans and to the consumer base that ultimately looked to participate in the IPO.
Well, Darren, Mark, it looks like we're out that's about time for today, but we want to congratulations to you all on Level Brands and Fat Brands. You truly are pioneering the way people invest now these days.
Thank you, guys.
All right, guys, that was
Thank you.
CEO of CrowdfundX, Darren Marble, CEO of Tripoint Global Equities, and BANQ Mark Elenowitz. And guys, subscribe to our YouTube channel, like us on Facebook, follow us on Twitter, catch our podcast on iTunes and SoundCloud, and we'll see you next time. Stay tuned for the next interviews here on InvestorTownHall.com.